right, buckle up everyone, because today we're diving deep into price action trading.
Ooh,
I
exciting.
know, right? We've got Rainer Teo's book, Price Action Trading Secrets, to guide us.
Sounds like a treasure map to market mastery.
You got it.
Uh,
We're going to uncover those hidden gems that can help anyone become a consistently profitable trader.
Sign me up.
So Teo kicks things off with these natural laws of trading, kind of like the market has its own set of rules, just like gravity, right?
Love that analogy. And he really emphasizes that you don't need to be a rocket scientist to grasp these principles.
Totally. He uses this brilliant example of practicing musical scales.
Oh, yeah, like to become a virtuoso, you practice those skills religiously.
Exactly.
Mm.
And just like consistent practice leads to musical mastery, consistently applying a winning trading strategy can lead to consistent profits.
Exactly. He even says those profits become more consistent when you apply proper risk management.
Oh yeah, risk management, we got to protect that trading capital.
Absolutely, like building a solid foundation for your trading success.
Makes sense. Now, one of the things Teo stresses is the importance of having an edge in trading.
He uses a coin toss analogy to illustrate this.
A coin toss.
Yeah.
How does that relate to trading?
Imagine you have a coin that's weighted to land on heads 60% of the time.
Okay, so it's not a fair 50-50 toss anymore?
Exactly. That's your edge. In trading, that means having a strategy that statistically wins more often than it loses.
So it's not about winning every single trade.
Nope. It's about having a system that puts the odds in your favor over the long run.
No, this reminds me of something else Teo talks about, the law of large numbers.
Ah, yes. The more you flip that weighted coin, the closer the results will get to that 60% heads.
So the more we trade with a sound strategy, the closer our results should align with our edge, right?
You got it. And this is where patience and discipline come into play.
Oh yeah, sticking with your strategy even when you hit a few bumps in the road.
Absolutely. Because short-term results can be deceiving.
New traders often fall into the trap of jumping from one strategy to the next, chasing the latest hot thing.
So true. And that's why he emphasizes that trading is a marathon, not a sprint.
It's about developing a sustainable approach, not trying to get rich quick.
Exactly. Slow and steady wins the race, as they say.
Speaking of steady, I can't forget that nail-biting story about John and Sally, both using the same winning strategy.
Oh, I remember that one. John goes all in, risks way too much, and ends up wiping out his account.
Meanwhile, Sally plays it safe, manages her risk carefully, and grows her account steadily.
Talk about a powerful lesson in risk management. You could have the best strategy in the world, but if you don't protect your capital, game over.
It's like Teo says, risk management is your Fort Knox. Got to keep that trading treasure safe.
And what's fascinating is how he connects risk management to the power of compounding.
Compounding, let those profits work for you.
Right, exactly. That's where the real magic happens. He calls it the snowball effect.
But it takes patience and discipline to let that snowball grow.
Just like you wouldn't eat the seeds of an apple before planting it and expecting a tree.
Makes perfect sense. So no get-rich-quick schemes here. It's about building for the long haul.
Exactly. And this is where Teo debunks that whole myth of the holy grail in trading.
Oh, you mean that one perfect strategy that always wins?
Yeah, it doesn't exist. Markets change and successful traders adapt. It's about finding what works for you, understanding the principles, and constantly learning.
Speaking of learning, let's unpack what price action trading actually is and why it's so powerful.
Love it. Teo busts this common myth right off the bat that price only goes up because there are more buyers.
Really? I always thought that was how it worked.
Imagine this. 100 people each want to buy one share of Google, but then one person comes along and wants to sell 1,000,000 shares.
Whoa, that's a lot of selling pressure.
Even though there are more individual buyers, that massive sell order can push the price down.
So it's not just about who's buying or selling, but also the volume they're trading.
Exactly. And this is where price action comes in. It helps you see those underlying forces of supply and demand.
Okay, so that makes sense. But here's where I get a little confused.
What's that?
Teo actually says you can ignore the news because price already reflects it.
He does, and he makes a compelling argument.
I mean, how can we just ignore the news?
He uses this crazy example, AMD stock.
Oh yeah, AMD, they've been on fire lately.
They had negative earnings for 3 years straight, but their stock price skyrocketed over 700% in just 1 year.
Wow, that's wild. So even with bad news, the price can still go up.
Exactly. And imagine trying to keep up with all the news and data surrounding AMD during that time. You would have been exhausted.
Probably would have made some bad decisions too, trying to overanalyze everything.
Teo's point is that price is the ultimate truth in the markets. It reflects all the available information, good or bad.
So we can simplify things by focusing on price action alone.
Exactly. It's like cutting through the noise and getting to the heart of the matter.
So if we're focusing on price action, what are we actually looking for?
That's where market structure comes into play.
Okay, I'm all ears.
Teo explains that markets move in cycles, not straight lines.
Cycles, like up and down, up and down.
It's a bit more nuanced than that.
Okay, tell me more.
He breaks it down into 4 stages: accumulation, advancing, distribution, and declining.
Those sound familiar. Kind of reminds me of breathing.
You got it. It's like the market's taking a deep breath in, gathering energy, and then exhaling as it moves.
So during the accumulation phase, the market's taking a breath, prices are relatively calm, and
Then comes the exhale, the advancing stage.
that's where we see those beautiful uptrends, those higher highs and higher lows.
Exactly. The market's releasing all that pent-up energy.
And then what happens?
The market needs to take another breath, right? That's the distribution phase.
So the uptrend starts to lose steam,
And prices start to consolidate as buyers and sellers find a new equilibrium.
so like the market's catching its breath before the next move.
Exactly. And then comes the final exhale, the declining stage, where selling pressure takes over and we see those lower highs and lower lows.
Wow, that's such a helpful way to visualize those market cycles. So knowing which stage we're in can give us a clue about what to expect next.
Exactly.
Yeah.
It's like having an insider's view of the market's intentions.
I like that. So if I see those signs of accumulation, it might be a good time to start looking for buying opportunities.
Exactly. But if we're seeing those declining stage patterns, it's probably a good time to step aside or even consider shorting.
So we're not just blindly buying or selling, we're actually understanding the market story.
And that's what price action is all about. It's like learning to read the market's body language.
Okay, I'm definitely starting to see the power of this approach.
And the best part is it can be applied to any market and any time frame.
So whether I'm trading stocks, Forex, or even crypto, these principles still hold true.
Absolutely. It's a universal language that can help you navigate the markets with more confidence and clarity.
I'm loving this.
Yeah.
Now, there's one more thing I want to touch on before we wrap up this part.
What's that?
Support and resistance.
Ah, yes. The battle lines of the market.
Teo has this fantastic quote. He says, "Support and resistance are like gravity in trading."
It's true. They influence price action just like gravity influences how objects move.
So support is like a floor where buying pressure tends to be strong, and resistance is like a ceiling where selling pressure takes over.
You got it. Think of it like this. If the price approaches a support level and bounces back up, it suggests buyers are stepping in.
And when it approaches resistance and gets pushed back down, that tells us sellers are in control.
Exactly. It's all about that constant battle between buyers and sellers.
Makes perfect sense. But there's always that debate about how many times a level needs to be tested to be considered strong.
Ah, yes, the myth of multiple tests.
I've always heard that the more times a level is tested, the stronger it becomes.
That's actually a big misconception. Teo debunks it brilliantly.
Really? So multiple tests don't necessarily mean a level is strong?
Nope. He argues that multiple tests often mean the level is actually weakening.
Okay, now I'm really intrigued. Explain that one to me.
Think about it. Each bounce off support means buyers are stepping in to defend that level.
But eventually, those buyers might run out of steam, right?
Exactly. And that's when we might see the price break through that support level.
And then could that old support level actually become resistance?
You got it. It's like the battle lines have shifted.
Wow, that's fascinating. So how do we figure out if those levels are going to break or hold?
That's where things get really interesting, and we'll dive into those details in the next part.
Okay, Cliffhanger, you've got me hooked. I can't wait to learn more about how to read those support and resistance levels and use them to make smarter trading decisions.
We'll uncover those secrets and more, so stay tuned.
Okay, so we left off talking about support and resistance, those battle lines, right?
Exactly. And those levels play a huge role in Teo's trading examples, which is what we're diving into now.
Awesome. Let's see those formulas in action.
All right. First up, breakout trades.
Perfect for that MBE formula, right?
Yeah.
Market structure, build up, entry trigger, exits. Got it.
You got it. And Teo's first example is NZDJPY on the daily chart.
Okay, NZDJPY. Let's see what's happening.
So first things first, market structure.
Right. Gotta know what the market's doing before jumping into a trade.
Exactly. And in this case, Teo points out that the market's showing signs of being in a potential accumulation stage.
Accumulation, so like it's taking a breather gathering energy.
Exactly. And it's approaching this key resistance level at 7700.
Okay, so we've got accumulation, resistance. Sounds like a potential breakout brewing.
Right. But how can we be sure it's actually accumulating, not just hanging out?
Good question.
Well, that's where those subtle clues come in. Teo notices a series of higher lows leading into that resistance level.
Higher lows, so like each dip is higher than the previous one.
Exactly. It suggests that buying pressure is building.
Okay, so the market's inching closer and closer to that resistance, testing its strength.
Exactly. And then there's this buildup forming right at that 70.0 level.
Build-up, meaning prices are getting tighter and tighter.
Yep. It's like the market's holding its breath, getting ready to make a move.
Ooh, suspense is building.
I know, right? And to make things even more interesting, the 20-period moving average has caught up to those lows.
The 20 MA, that's one of Teo's favorite tools. He sees that as further confirmation, right?
Yep. Like another sign that the market's poised for a potential breakout.
Okay, so we've got accumulation, a buildup, and the 20 MA confirming the move. Sounds like a solid setup. How do we actually trade this?
All right, so Teo's plan is to use a buy stop order placed just above those highs.
A buy stop, so like we're setting a trap, waiting for the price to break through that resistance.
You got it. Once that price bursts through, our order gets triggered, and we're in the trade.
Smart. We're not chasing the breakout, we're waiting for confirmation.
Exactly. But of course, we need to protect ourselves in case things don't go as planned.
Right. Got to have that stop loss in place.
Teo suggests placing it 1 ATR below the lows of that buildup.
1 ATR, that's the average true range, right?
You know it. It helps us gauge the market's volatility.
So we're giving the trade some breathing room, not getting stopped out by normal price fluctuations.
Exactly. But what if the breakout is successful and the price keeps climbing?
Do we just hold on forever?
Well, Teo recognizes that breakouts from accumulation stages can have some serious legs.
Meaning they can turn into big trends.
You got it. So he plans to use a trailing stop-loss order.
A trailing stop, that's how we let those profits run.
Right, exactly. He suggests a 3 ATR trailing stop for this setup.
So we're locking in profits as the price moves up,
Yeah.
but also giving the trade room to breathe.
Precisely. It's a way to maximize potential gains while minimizing potential losses.
I'm loving this MBE formula in action. Got any other breakout examples for us?
You bet. Let's switch gears and look at URNZD on the daily chart.
URNZD, all right. What kind of setup are we seeing here?
This time, the market isn't in a clear accumulation or distribution stage.
So no clear breathing pattern.
Not really. It's more like it's just hanging out in a range.
Okay, so the price is bouncing between support and resistance.
Exactly. But even in range-bound markets, you can find breakout opportunities.
How so?
Well, in this case, the price recently broke below a support level.
So it's like it punched through that floor.
Exactly. And now it's forming a buildup right at that previous support, which has now become resistance.
So it's like that level flips sides. It's now acting as a barrier.
Precisely. And guess what? The 20 MA has caught up to those highs.
Another confirmation signal. But this time, it's a potential move lower, right?
You got it. Instead of buying the breakout, we're looking to sell it.
Okay, selling the breakdown? What's the plan?
Teo suggests placing a sell stop order below the lows of that buildup.
Sell stop, so we're waiting for the price to break down through those lows.
Exactly. And of course, we need our stop loss placed 1 ATR above the highs.
1 ATR above, got it. Any profit targets?
Teo identifies a potential target at 1.6600.
1.6600. Why that level?
It's a previous significant swing low.
Ah, so that's where buyers might step in again, providing support.
You got it.
Okay, I'm seeing how we can apply this MBE formula even in range-bound markets.
Exactly. It's all about recognizing those buildups and waiting for confirmation before entering the trade.
Now, I've got a question about those stop-loss placements.
Shoot.
Teo seems to always use 1 ATR. Is that like some magic number?
It's a good question, and one that a lot of traders ask.
So is there a magic formula for stop-loss placement?
Not really. It depends on the market's volatility, the time frame you're trading, your risk tolerance.
Okay, so 1 ATR is more of a guideline.
Exactly. The key is understanding the concept.
Give the trade enough room to breathe, but don't make the stop loss so wide that it eats into your potential profits.
Exactly. It's all about finding that balance.
Makes sense. Speaking of profits, let's talk about another breakout example, one that really showcases how Teo thinks about those potential gains.
Ooh, which one is it?
Bitcoin, everyone's favorite, right?
Of course. What's happening in the Bitcoin world?
So Teo's looking at the daily chart and observed that the market's in an accumulation stage. Bitcoin accumulating, that sounds promising.
Right. And it's approaching a resistance level around $4,200.
Okay, so we've got accumulation, resistance, any other signs pointing to a breakout.
Yep. Teo spots a series of higher lows leading into that resistance, just like with the NZDJPY example.
Those higher lows again. A sign of strength.
Exactly. And this time, they're forming a specific pattern, an ascending triangle.
Ascending triangle, that's bullish, right?
Oh, no, it
Yeah.
often precedes breakouts.
So it's like the market is getting squeezed tighter and tighter within that triangle, building up energy.
Exactly. And for even more confirmation, the 20MA is providing support, acting like a floor underneath price.
Okay, so we've got accumulation, an ascending triangle, and the 20MA supporting the move.
It's all coming together.
So how do we play this?
Teo's plan is to place a buy stop order above the highs of that $4,200 resistance.
Buy stop, waiting for that breakout confirmation, same as before.
Exactly. And for his stop loss, he goes 1 ATR below the previous minor swing low.
Giving it some space to avoid those fake outs, right?
Yeah, I got it. Now, what about profit targets?
Yeah. Is he aiming for a specific level or letting those profits run?
Well, just like with the NZDJPY example, he sees potential for a strong trend if the breakout is successful.
So he's going with the 3 ATR trailing stop again.
Exactly, riding that wave.
Breakouts from accumulation stages, those are the setups that can really make those big moves, huh?
They definitely have that potential.
Okay, I'm loving these breakout examples, but what about those reversal trades, the ones using the MAE formula?
Ah, you want to see those reversals in action.
You bet. Show me how to catch those market turns.
All right, let's take a look at URCAD on the daily chart.
URCAD, let's go.
So first things first, what's the market structure?
Right. Got to set the stage.
Exactly. And in this case, it's pretty clear we're in a declining stage.
Declining stage, lower highs, lower lows, the market's on a slide.
Exactly. And to make things even more interesting, the price recently made a swing high into a resistance level.
So, like it tried to rally, but it got rejected.
Yep. And then it formed a bearish engulfing candlestick pattern.
Bearish engulfing, that's a strong signal, right?
It's a pretty clear sign that sellers are stepping in and rejecting higher prices.
Okay, so the market tried to rally, but got smacked back down.
Exactly. And this is where the MAE formula comes in.
Time to catch that reversal.
Teo sees this as a potential selling opportunity, betting that the price will continue lower.
Okay, selling URCAD. When do we enter?
Teo's plan is to enter on the next candles open.
So waiting for confirmation that the selling pressure is continuing.
Exactly. And for his stop loss, he goes 1 ATR above the high of that bearish engulfing pattern.
1 ATR above, got to give it some breathing room.
Exactly. Now, what about profit targets?
Yeah, where are we aiming for?
Teo identifies two potential targets, the near swing low at 1.459E and a more distant one at 1.4450.
2 targets, giving himself some options.
Exactly. He's aiming for those areas where buyers might step in and provide support.
Okay, so we're selling, protecting ourselves with a stop loss, and aiming for those potential support levels.
Exactly. But here's an important nuance that Teo highlights.
What's that?
He views this as a weak trend.
Weak trend, what difference does that make?
Well, weak trends are more prone to those sharp reversals.
Ah, so if we're using a trailing stop, we might get whipsawed out of the trade too early.
Exactly. So in this case, Teo prefers to capture a swing, a quick move, rather than trying to ride the trend.
Sometimes it's better to take the quick win and move on.
Exactly. Now let's look at a reversal example in a range-bound market.
Range-bound reversal. Okay, let's see it.
This time, it's WTI crude oil on the daily chart.
Crude oil, always an interesting one.
So the price has made this powerful move down to a support level.
Powerful move down. Sounds like a potential buying opportunity.
That's what you'd think, right? But here's where things get really interesting.
Tell me more.
So the price actually traded below that support level for a bit.
Oh, so it broke through that floor.
It did, and that probably triggered stop-loss orders from those who were shorting the market.
Ouch. Those poor short sellers.
Right. But here's the crazy part. The price quickly reversed and closed near the highs of the day.
Whoa. Talk about a whipsaw. It tricked those short sellers into selling, then reversed and left them hanging.
Exactly. And this type of price action often creates a group of what Teo calls trapped traders.
Trapped traders, meaning they're stuck in losing positions.
Yep. Those who sold the breakdown and are now scrambling to buy back their positions.
Okay, so this bull trap actually turned into a buying opportunity.
You got it. Teo sees this as a classic example of how those traps can create those opportunities.
I love it. Turning the tables on those who tried to outsmart the market.
Exactly. So what's the game plan for this setup?
Lay it on me.
Teo buys on the next candles open, waiting for confirmation that the reversal is holding.
Buying on the open, got it. What about the stop loss?
one ATR below the low of that reversal candle.
One ATR below, giving it some breathing room and profit targets.
He sets his sights on 58.0 and 63.00.
Why those levels?
Their previous resistance levels.
Ah, so we're using those old battle lines as potential areas to take profits.
Precisely. But what if the price moves in our favor but then stalls before hitting those targets?
That's trade management, right? One of the trickiest parts of trading.
It definitely is. There's no one-size-fits-all answer.
So what do? Hold on and hope it reaches the target. Move our stop loss to break even. Take partial profits.
It depends on your risk tolerance, your assessment of the market, your confidence in the setup.
Okay, so there's no magic formula, but there are some key questions we can ask ourselves.
Exactly. It's all about weighing the potential rewards against the risks.
And finding a strategy that fits our trading style and personality.
Precisely. All right, ready for another reversal example?
Bring it on.
This time, Teo actually trades against the trend.
Against the trend. That sounds a bit risky.
It can be, but sometimes those counter-trend trades can offer great opportunities.
Okay, I'm intrigued. Tell me more.
So we're back to GBP/USD on the daily chart, but the market is in a declining stage.
The declining stage, lower highs, lower lows, the trend is down.
Exactly. But here's what Teo notices. The price made a sharp move down to a swing low.
Okay, so far so good.
But then it got strongly rejected, forming a bullish hammer candlestick pattern.
A bullish hammer, that's a reversal signal, right?
Yep. It suggests that buyers stepped in and pushed the price back up.
So the market tried to go lower, but it hit a wall of buying pressure.
Exactly. And that strong rejection probably trapped some of those who had shorted the breakdown.
Oh, those trapped traders again.
Right. And that can create what's called a short squeeze, where those trapped shorts have to buy back their positions, pushing the price even higher.
Okay, I'm starting to see why Teo saw a counter-trend opportunity here.
Exactly. He's betting that the price will bounce higher even though the overall trend is down.
But trading against the trend is risky.
Yeah.
How do we manage that?
Teo enters the trade on the next candle's open, waiting for confirmation.
Confirmation that the reversal is holding, right?
Yep. And his stop loss goes 1 ATR below the low of that hammer candle.
1 ATR below. Got it. What about the profit target?
He sets his sights on the recent swing high, around 1.2290.
So, aiming for a bounce within that downtrend.
Exactly. But here's the key to managing this type of trade.
What's that?
Teo trails his stop loss below the previous candle's low.
Trailing the stop. That's how he protects himself if the downtrend resumes.
Exactly. If the price breaks down and closes below that previous low, he's out, even if it hasn't reached his target.
It's like he's saying, I'm taking this counter-trend trade, but I'm not going to hold on if the trend resumes.
Precisely. It's a way to limit potential losses while still capitalizing on those counter-trend moves.
I'm liking this. So the MAE formula can be used for trend trades, counter-trend trades.
It can even be used in range-bound markets.
Wow, it's really versatile. But what about those times when there's just no clear setup? But does Teo ever just stay out of the market?
He does. Sometimes the best trade is no trade at all.
You mean even Teo sits on the sidelines sometimes?
Absolutely. He's not afraid to wait for those high-probability setups.
Makes sense. Why risk your capital if the market's not giving you a clear signal?
Exactly. And he even gives some examples of when he chooses to stay out.
Okay, I'm all ears. Give me those examples.
All right, first one is USD INR on the daily chart.
USD INR. Okay. What's happening there?
The market is in a range, and the price has recently retested a support level.
So, like, it bounced off that floor.
It did, but then it reversed sharply and moved back into the middle of the range.
So it's like the price is ping-ponging between those support and resistance levels.
Exactly. And Teo has no interest in trading this type of setup.
Why not? Seems like there could be opportunities there.
He calls it no man's land.
No man's land. What does that mean?
It means there's no clear direction.
Ah, so if he were to buy, he'd need a wide stop loss below support. And if he were to sell, he'd need a wide stop loss above resistance.
Exactly. The risk to reward just isn't there.
Okay, I'm starting to see how sometimes it's better to just wait for a better setup.
Exactly. Patience is key.
What's another example?
All right, let's look at U.S. Treasury bond futures on the daily chart.
Bonds. Okay. What's happening in the bond market?
The market is in a healthy uptrend.
Uptrend, that's good, right?
It is, but the price is currently overextended.
Overextended, meaning it's moved too far too fast.
Exactly. It's way above its 50-period moving average.
So there's a good chance it might pull back, retrace towards that moving average.
Exactly. And if you were to enter a long trade at that level, you'd need a wide stop loss below the 50 MA.
Wide stop loss, that means more risk.
Exactly. The risk to reward just isn't favorable.
Okay, so even in an uptrend, there are times when it's better to stay out.
Precisely. Let the market come to you, wait for a better entry point.
Got it. What's the last example?
Let's look at gold on the daily chart.
Gold, always a popular one.
So the market is in an advancing stage.
Advancing meaning it's making higher highs and higher lows.
Exactly. It recently broke out above a resistance level.
Breakout sounds like a good thing.
It is, but here's the catch. There's no nearby price structure.
Price structure, you mean like previous swing highs or lows?
Exactly. Those levels can act as guides for stop-loss placement.
So in this case, we're entering uncharted territory, no clear map to guide us.
Precisely. If we were to enter a long trade here, we wouldn't have a clear level to place our stop-loss.
So we'd be exposed to the risk of a sharp reversal without any protection.
Exactly. Too risky.
So what does Teo recommend?
He suggests waiting for one of two scenarios.
Okay, what are those?
Either the price retests that previous resistance level, which has now become support.
So we could buy on that pullback with a tighter stop loss.
Exactly. Or the price consolidates and forms a buildup, potentially setting up another breakout.
So we're either waiting for a pullback to support or a fresh breakout from a new buildup.
You got it. It's all about waiting for those high probability setups where the risk is defined.
I'm seeing a theme here. Patience, patience, patience.
It's one of the most valuable skills a trader can develop.
Okay, so we've covered breakouts, reversals, and even some examples of when to stay out of the market.
KO really emphasizes that these examples are just a starting point.
So we should study them carefully, apply the concepts to different markets and timeframes.
And most importantly, develop our own trading plans.
That's the goal, right? To become independent traders, not just blindly following someone else's rules.
Exactly. It's about taking this knowledge and making it your own.
I'm feeling inspired. Time to grab my notebook and start practicing.
That's the spirit. The more you practice, the more confident you'll become.
And that confidence is key, right?
Absolutely. It helps you stay disciplined, stick to your plan, and weather those inevitable market storms.
Okay, I'm ready to face those storms. But before I get carried away, let's take a break and then come back for the final part of our deep dive.
Sounds good. We'll explore those final gems of wisdom that Teo shares, especially those insights on mindset and resilience.
I'm really looking forward to that. Trading is so much more than just charts and indicators. It's about mastering our own emotions and building that winning mentality.
You got it. We'll be back soon to uncover those secrets of trading success.
We're back and ready to wrap up our price action adventure.
It's been quite a journey, uncovering those trading secrets. Right?
Totally. We've talked market structure, those awesome MAE and MBE formulas, but there's one more piece of the puzzle we need to explore.
You mean mindset and resilience?
Exactly. Teo really emphasizes that in the last chapter of his book. It's like, you can have all the technical skills, but if your head's not in the game...
You're not going to reach your full potential.
Exactly. And Teo's own story is a perfect example of that.
Oh, yeah. His transformation is seriously inspiring. Remember how he went from struggling student to graduating with first-class honors?
And he even transformed his physical health. It's like proof that we could achieve amazing things if we set our minds to it.
It's not just about willpower, though, right? He talks about the importance of finding your why.
That's so important. Knowing why you're doing something can give you that extra push when things get tough.
It's like the fuel that keeps you going, especially when you hit those inevitable roadblocks.
I mean, we know trading has its fair share of roadblocks.
Oh, yeah, it's definitely a roller coaster ride.
But having that strong why can help us navigate those ups and downs.
It's like a compass guiding you towards your ultimate destination.
I love that analogy. So for Teo, what was his why?
It was deeply personal, making his hardworking father proud and justifying the sacrifices his family made to support him. Really powerful stuff.
Wow, that's incredibly motivating.
It definitely is. And it ties back to what we've been talking about. Trading is a marathon, not a sprint. You're going to face challenges, you're going to make mistakes, but that strong why can help you stay the course.
It's about remembering the bigger picture, right? Why you started this journey in the first place.
Exactly. And Teo also emphasizes that our past doesn't define us. It's how we learn from those experiences and move forward.
It's that growth mindset, always striving to improve, learn from our mistakes, and become better traders.
Absolutely. And that's a valuable lesson for life in general, right?
Totally. So as we wrap up this deep dive into price action trading secrets, what are those key takeaways that have really resonated with you?
So many great insights. But if I had to pick a few...
Yeah. What are those nuggets of wisdom that we can apply to our own trading journeys?
Well, for me, it's the importance of understanding market structure, those cycles of accumulation, advancing, distribution, and declining.
It's like learning to read the market's breath.
Exactly. And then, of course, those MAEE and MBE formulas, they provide such a clear framework for identifying trading opportunities.
Those formulas are like our secret weapons.
And let's not forget about risk management protecting our trading capital like it's Fort Knox.
Risk management is non-negotiable. It's the foundation of successful trading.
It's like building a house. Gotta have a solid foundation before you start adding those fancy features.
I love that analogy. So we've got those technical skills covered, but what about the mental game?
That's where resilience comes in, that ability to bounce back from setbacks, stay focused on our goals, and keep learning and growing as traders.
It's like developing those mental muscles, training our minds to stay disciplined and focused, even when the market throws us curveballs.
And remember, those curveballs are inevitable.
Oh yeah, the market will always keep us on our toes.
But with the right mindset and the right tools, we can navigate those challenges and come out stronger on the other side.
I'm feeling inspired and a little bit overwhelmed, to be honest. It's a lot to take in.
It is. But don't worry, you don't have to master everything overnight.
So where do we go from here? What's the next step?
Teo has some great advice. He encourages us to study those trading examples, practice identifying those price action patterns, and start building our own trading plans based on the principles we've discussed.
So it's about taking action, putting this knowledge into practice.
Exactly. And remember, this is just the beginning of your price action journey. The market is constantly evolving, so always stay curious, keep learning, and never stop refining your skills.
I'm excited to see where this journey takes us. Thanks for joining us on this deep dive into the world of price action trading. We hope you found it valuable, insightful, and maybe even a little bit inspiring.
And remember, as Teo always says, happy trading.